Hey everyone. Ready for a deep dive into something that's been shining pretty brightly in the news lately?
Oh, yeah, I know what you're talking about.
Gold. It's been on a tear the past few years, and today we're going to dig into why.
Sounds fascinating.
We've got this super interesting article. It's called Gold's Ascent, unpacking the factors behind the price surge of the past 3 years.
Okay.
And it lays out how a whole bunch of global events have basically created the perfect storm for gold prices.
Makes sense. I mean, think about everything that's been happening.
Right. To help us break it all down, we've got our expert here. Thanks for joining us.
My pleasure. Glad to be here.
So the article jumps right in, talking about all the economic uncertainty we've seen lately.
Oh, yeah, for sure. And not just like normal ups and downs. We're talking major disruptions.
Exactly. It mentions COVID. Obviously, that threw everything for a loop,
Absolutely. And right on the heels of that, the war in Ukraine.
which has obviously had huge impacts on, well, everything, it seems.
Oh, yeah. Energy prices, supply chains. It's a mess.
And all of this has led to, as I'm sure everyone's feeling, inflation.
Which eats away at everyone's buying power.
Right. So how does gold fit into all of this? We keep hearing it's a safe haven, but what does that actually mean in practical terms?
So it's like this. When things get really unstable economically, people start looking for something that will hold its value.
Something reliable, yeah.
Exactly. And historically, gold has been that thing.
Because it's shiny.
Well, that's part of the appeal, sure, but there's more to it.
Like what?
Gold is a finite resource. There's only so much of it on Earth.
Right. You can't just make more of it.
Exactly. And for centuries, across cultures, it's been seen as a store of value, something that endures when currencies go haywire.
Oh, I see. So it's like a global comfort blanket. Everyone agrees it's valuable.
You got it. And the article points out something really interesting. It's not just individuals buying gold.
Really? Who else is stocking up?
Central banks, especially those in emerging markets, they're adding tons of gold to their reserves.
Whoa, whole countries are buying up gold. Why would they do that?
They're looking for the same thing as individual investors' stability.
Okay.
It diversifies their holdings, and it also reduces their dependence on the U.S. dollar.
Interesting. So it's kind of a power move, too. Like saying, we're not putting all our eggs in the dollar basket.
There's definitely an element of that. It's a way to hedge their bets in a world that feels increasingly unpredictable.
I see. And this demand from central banks is adding fuel to the fire, pushing prices even higher.
Absolutely. It's a major factor.
Okay, so we've got global anxiety. We've got countries hoarding gold. The plot thickens. But the article also mentions something about the U.S. dollar weakening and how that affects gold.
Right.
What's the connection there?
So there's this kind of inverse relationship between the dollar and gold.
Maybe what?
When the dollar gets weaker, gold becomes more affordable for anyone buying it with a different currency.
Oh, I see. So if I'm in Europe using euros, a weak dollar means I can get more gold for my money.
Exactly. It's like a sale on gold for international buyers, which
Yeah.
obviously drives up demand.
Wow, it's like a global gold rush. So far, we've got economic chaos, countries stocking up on gold like it's going out of style, and a weak dollar making it cheaper for international buyers.
It all adds up.
No wonder gold prices are skyrocketing. But there's one more piece of the puzzle the article mentions.
What's that?
Low interest rates.
Oh, yes.
How do those play into all of this?
Well, it has to do with something called opportunity cost.
Okay, break that down for me.
Imagine you have some money to invest. You could put it in a savings account and earn a little bit of interest, or you could buy gold, which doesn't earn interest but might increase in value.
Okay, I'm following so far.
When interest rates are high, that little bit of interest from your savings account looks pretty good.
Because you're missing out on more potential earnings by choosing gold instead.
Right, but when interest rates are low, like they are now, the difference isn't as big.
So gold suddenly looks more appealing.
Exactly, because you're not sacrificing as much interest by choosing it over a savings account.
So with low interest rates,
Mm.
it's like gold is competing in a less competitive environment.
That's a great way to put it. And this is especially important in the U.S. right now, where we're seeing falling yields on those super safe U.S. Treasury bonds.
The investors are looking for better returns, and gold seems like a good option.
Exactly.
Wow, it's amazing how everything is connected, from global pandemics to interest rates to the price of a shiny metal. It's like this intricate web, and each thread affects the others.
That's economics for you. It's all interconnected.
And we've only just scratched the surface. We haven't even talked about the actual process of getting gold out of the ground.
Right. The article mentions that it's not exactly easy or cheap.
So let's dig into that next, literally. Okay, so we're back, And before we got sidetracked by how much the economy is like a giant spider web, we were about to get into the nitty-gritty of gold mining itself.
Right. It's not like you just pick gold nuggets off trees.
Yeah, the article makes it clear that gold mining is a seriously intense and expensive operation.
Oh, absolutely. It's a whole process. And on top of that, finding new gold deposits has been getting harder.
So it's getting more difficult to both find it and get it out of the ground.
Exactly. And you know what that means?
Scarcity. Econ 101, right? The less of something there is, the more valuable it becomes.
Classic supply and demand in action. And with gold, that limited supply combined with all the factors driving up demand, well, it's a recipe for rising prices.
Makes sense. So, okay, let's say I'm convinced and I want to jump on this gold bandwagon. How do I actually do that? If I want to get some of this golden goodness for myself, what are my options?
Well, the most straightforward way is to buy physical gold.
Like actual gold bars.
Yeah, bars, coins, maybe even that gold tooth your grandma saved from when you were a kid.
Uh-huh. I don't think my grandma was that sentimental. But seriously, isn't that a bit inconvenient? Like, where do you even keep a gold bar?
That's the thing. Physical gold comes with some logistical challenges.
Like what?
Storage, security, and if you need to sell it quickly, it's not always easy to liquidate.
Okay, so maybe not the best option for your average investor.
Right. The article talks about something called investment demand,
Okay.
which basically means people are buying gold purely as an investment, not to use for anything specific.
Gotcha.
And the most popular way to do that is through ETFs.
No, I always get ETFs and mutual funds mixed up.
ETFs, or exchange-traded funds, they're like baskets of assets that you can buy and sell on the stock market.
So in this case, the basket is filled with gold.
Yeah, these specific ETFs track the price of gold. So when gold goes up, your ETF shares go up too.
So it's like owning a piece of the gold market without having to deal with the actual physical gold.
Precisely. No need for a treasure chest under your bed.
That's a relief. Are there any other ways to invest in gold besides ETFs?
You could look into gold mining stocks.
Oh, right. So you're basically betting on the companies that dig up the gold.
Exactly. If those companies do well, their stock prices go up.
Sounds risky, though. What if they don't find any gold?
That's the gamble. Mining companies face all sorts of challenges, operational issues, political instability in the regions where they operate, not to mention the fluctuating price of gold itself.
So it's not for the faint of heart.
It's definitely higher risk, higher reward compared to just buying gold directly.
Got it. Okay,
Yeah.
so we've talked about all these reasons why gold is seen as a good investment, but even safe havens must have some downsides, right? What are the risks?
Oh, absolutely. Every investment has risks, gold included.
Like what?
Well, as we've seen, the price of gold can be pretty volatile. It's affected by all sorts of global events, many of which are impossible to predict.
So no guarantees, even though it tends to hold its value well over time.
Right, and don't forget, unlike stocks that pay dividends or bonds that offer interest, gold doesn't generate any income.
Oh, I see. So you're really just betting on the price going up.
That's it. You're relying solely on price appreciation for your returns.
Okay, that makes sense. So to sum it up, gold has the potential for big rewards, but it also comes with its share of risk.
Exactly. It's not a one-size-fits-all solution.
So what would you say are some of the key things to consider before investing in gold?
First and foremost, your own individual circumstances, your financial goals, your risk tolerance.
Right, it's not just about jumping on the bandwagon.
Exactly. But assuming you've done your homework and you're comfortable with the risks, why might someone want to include gold in their portfolio? Aside from the potential for profit,
Well, we talked about how it's a hedge against inflation, right?
that's a big one. As prices for everything else go up, gold tends to hold its value, which protects your purchasing power.
So it's like a shield against your savings losing value.
Exactly. And then there's the whole safe haven aspect we discussed.
Right, when things get crazy in the world, people flock to gold.
It provides a sense of security and stability when other assets, like stocks or bonds, are all over the place.
Okay, so a hedge against inflation, a safe haven during times of turmoil. Was there another one?
Diversification.
Ah, right. Don't put all your eggs in one basket and all that.
Exactly. And gold, because it's a tangible asset that often moves independently of other assets, can really enhance a portfolio's diversification.
So even if the stock market tanks or real estate goes bust, my gold holdings could potentially soften the blow.
That's the idea. It's not a foolproof guarantee, but it can help balance things out.
This is all so fascinating. I'm starting to see gold in a whole new light. It's like this ancient, powerful force in the financial world.
It's definitely more than just a shiny metal. It has this long and complex history that continues to shape our world today.
I feel like we've barely scratched the surface here.
Oh, there's so much more we could explore. The cultural significance of gold, its uses in technology and art, the ethical considerations surrounding mining.
Right, right. So much to unpack.
Yeah,
But for now, I think we've laid a pretty solid foundation.
I think so too.
Yeah.
We've covered the factors driving gold's price surge, the pros and cons of investing in it, how it fits into a diversified portfolio.
Yep. And before we wrap up this golden adventure, let's leave our listeners with a little something to ponder.
I like it, a cliffhanger.
Imagine you're a central bank manager.
Oh, wow. Big shoes to fill.
Your job is to safeguard your country's wealth and manage its foreign exchange reserves.
Talk about pressure.
So how do you decide how much gold to hold? Do you go all in on gold or spread the risk across other assets?
That's the billion-dollar question, literally.
It's a balancing act between gold's historical stability and the constantly changing landscape of the global economy.
No easy answers there.
Definitely a topic for a whole other deep dive.
Yes.
But for now, we'll leave it there. Join us for the final part of our gold exploration, where we'll delve deeper into the decisions facing central banks and the role of gold in the global financial system. All right, so we're back, and last time we left you with a real head-scratcher.
Yeah, putting on that central bank manager hat.
Exactly. Imagine having to decide how much gold your whole country should hold, no pressure, right?
Oh, man. It's a tough one. You've got to think long-term, not just what's trendy today.
So when these central bankers are making those decisions, what are the big things they're thinking about?
Well, like we talked about earlier, diversification is key, even for central banks.
Right, right. Don't put all your eggs in one basket.
Exactly. They've got a whole mix of assets. Currencies, bonds, you name it. Gold's kind of its own thing. It doesn't always follow the same patterns.
So even if those other assets are having a rough time, gold can kind of smooth things out.
That's the goal. It adds an extra layer of security to the country's financial picture. But it's not just about spreading the risk either. Remember how we talked about gold being a safe haven?
Yeah, when things get unpredictable, gold tends to hold steady.
Exactly. For central banks trying to navigate global uncertainty, that stability is crucial.
It's like an insurance policy against chaos.
You could say that, and for some countries, holding gold is also a way to rely less on the US dollar.
Right, which has been kind of dominating the global financial scene for a while.
It's about finding more balance, more independence, more control over their own economic destiny. But of course, there are downsides to holding gold too. Well, it doesn't generate any income, right? No interest payments, no dividends, nothing.
It just sits there looking pretty.
And then there's the volatility. It's not always a smooth ride. Gold prices can fluctuate.
So central bankers have to weigh those factors. Diversification, stability, but also the fact that gold doesn't directly make them any money.
It's a complex equation with no easy answers, and on top of that, they're constantly watching the global scene. Economic indicators, political events, everything's in flux.
Wow, it's like playing 4D chess with the entire world economy.
Yeah, kind of.
Well, after this deep dive, I think I need a nap to process all this information. We've covered a lot of ground here. Gold mining, the psychology of investors, central bank strategies.
We've gone from the depths of the earth to the heights of global finance.
It's amazing how something so ancient, something that's been prized for centuries, is still so relevant today.
It's a testament to gold's enduring power, I think.
Absolutely. And with that thought, we want to encourage all of you listening to keep exploring, keep digging deeper. There's a whole world of fascinating stuff out there just waiting to be discovered.
Stay curious, ask questions. Who knows, maybe you'll strike gold in your own journey of learning.
And on that note, we'll wrap things up here. Thanks for joining us for this deep dive into the world of gold.
It was my pleasure.
Until next time, stay gold.